Hello there, many thanks for joining us on our Monday Business News Report. It's now time to bring you the feature on the show today as we analyze the state of the global economy and then also look at domestic happenings here in Nigeria. Now, prices of oil have largely been on the boil amid the Russia-Ukraine conflict. Now, although the prices have declined from the recent multi-year highs, volatility is likely to continue in the coming week as the geopolitical tensions seem unlikely to end anytime soon. Now, during a meeting last week, Russian President Vladimir Putin said that the country will continue to meet its contractual obligations on energy supplies. Now, Russia is a major producer and the second largest exporter of oil. Concerns of a ban by the European Union were raised after the US announced to ban import of Russian oil early last week, and the UK also says it will phase out imports from the country by the end of this year. Oil prices have been elevated since the tensions intensified and Russia invaded Ukraine just last month, and on the 7th of this month, Brent had touched $139.13 per barrel, one of the highest levels since the year 2008. Well, joining me now virtually to discuss this and more, I have Temitope Kolade, the Senior Manager, Power, Oil and Gas Unit of Anderson, to discuss the global impact as well as how this would also affect Nigeria. Thank you very much for joining us on the Breakfast Show this morning, Temitope.
Good morning, David. Thanks for having me.
Exactly. Now, in early February, JP Morgan analysis of the Russia-Ukraine crisis said that the disruptions to oil flows from Russia could push oil prices to a further level of $120 per barrel, which indeed it has already had the worst case scenario as we speak today now. And in other instances, we have some analysts saying that this would also hit $200, and Russia has even warned that this might hit $300 in terms of the oil price, depending on what Europe, which is much reliant on Russian oil and gas than the US, does. Now, what do you think are the intricacies you see playing out in the coming days, this fresh week, as we're starting today, and the oil market reaction to this from a global perspective, really?
Thank you very much, David, once again for having me. I think I need to first state that the Russian-Ukraine conflict is one that we didn't expect would take this sort of turn. But indeed, the prices of crude as well as gas is soaring. And basically, because of uncertainties around what role energy would play, Russia being a major producer of gas, for instance, that portends a lot of risk for the entire world, which is the uncertainties that is then making the market very difficult to predict going forward. And we're seeing prices soaring, right? What this means for the world at the moment is that we need to start looking at alternatives. Again, if the sanctions continue on Russia, it may also want to use the powers within its confines, such as the producer power of gas as well as crude, to maybe contend in the crisis, and that would mean more price increase for the world. And what options would then be left for the rest of the world is to begin to look at alternatives. Do we have enough alternative sources, for instance? Interestingly, when you think about gas projects and oil projects, it takes a lot of time, even though there could be invitations, for instance, into Africa to come and invest. How long are we going to see that investment come to some fruition, even if we have everything in terms of funds going into that? So it takes some time for us to see the maturity of the investment as well. So the other alternative would then be to see whether we have alternative energy sources, and there are concerns as whether Europe, for instance, will begin to think of options such as deploying nuclear energy, for instance, to serve its population, right? Do we need to also accelerate the move to renewable energy? Maybe those are options on the table, but largely, I think the US also is planning to give some sort of succor to Europe to give some sort of comfort that, oh, we could really provide you with some energy going forward.
Exactly. Now, Temitope, the bigger picture of the impact of this crisis and how much is roiling global markets and also injecting more uncertainty into an already off-balance world economy is the reality of heightened inflation running hotter, and some even say it's going to get much hotter at this point. Now, at current levels, oil prices could cut a full percentage point off economic growth rates in major oil importing countries such as Indonesia, South Africa, and Turkey, according to World Bank estimates. Now, for a country like Nigeria, that is one of the major producers, yet a heavy importer, how much of a hit should government prepare for in terms of our subsidy regime, looking at this 18-month extension period and our fate going forward till the subsidy removal comes to bear?
Thank you, David. Again, I think you mentioned it, with heavily dependent on importation of petroleum products. And that speaks a lot for us, even with respect to gas. As much as we have gas, a gas producing company in Nigeria, the NLNG, we still depend on importation of gas at the same time. So that in a way speaks so much for us. We could have turned to NLNG and say, oh, just produce for us, for instance, but the way gas contracts are structured is such that you have long-term contracts, medium-term contracts. So NLNG, for instance, would have some sort of mid-term and long-term contracts to continue to supply its major customers, right? So it's difficult to cut that supply and feed Nigeria. And if you look at it from petroleum product as well, right? The government has said that we're extending how long subsidy would continue. And unfortunately, we'll get to that point, or we could get to that point where the gains from crude, from royalty on the increased price of crude, as well as increased price generally within, I mean, the petroleum profit tax, for instance, that comes from petroleum sales by Nigerian companies will not be able to balance the subsidy that Nigeria has to pay for that for the increased price of petroleum products. So indeed, things are gloomy at the moment. We can only hope that the situation is managed in such a way that we get some sort of respite, and it doesn't generally impact on the populace as well in such a manner that it's very disruptive.
Temitope, now we're wrapping up our conversation. Now, rising oil prices effectively also redistributes income from all consuming nations in Europe and the likes of China to producers such as Saudi Arabia, Russia and Canada. Now, as a group, producing nations spend less of each additional dollar than do consuming countries, meaning that higher oil prices tend to reduce their overall economic activity. Do you see Nigeria continue to miss out as we aren't meeting our production quota amid the moribund state of our refineries and our high import dependence level? We are still reeling from the impact of the last one we imported, the adulterated fuel.
Absolutely, David. Coupled with not meeting our production quota is the fact that security levels are not very impressive, right, within those areas where we produce oil. And what that means is that it also speaks against the expectation of investors and their readiness to put in more capital to even invest, such that we could maybe turn around that expectation around meeting the production quota. For instance, OPEC increased the quota for us recently, but it's safe to say that we had not even met the previous quota. So that's as good as just wasting our time until we fix the fundamental issues and we are able to, of course, fix our moribund refineries and be self-sustaining at least to an extent. That's the way forward. Otherwise, like you said, we're going to be missing out on whatever potential gains that we should have from the crisis at the moment.
Thank you so much for your time on the Breakfast Show this morning. Temitope Kolade, we've been speaking with the Senior Manager, Power, Oil and Gas Unit of Anderson, and we also hope that the coast gets clearer and we get to see some sanity within the oil and gas market. Thank you once again.
Thank you,
that's it
David,
for the business.